Hello, dear traders. Gabriel here. Welcome back to my channel, FOREX.Real.Trader coaching sessions. Today, we will continue with Module 5 about real trading strategies in Forex. And I'm going to show you in detail the criteria and implementation for our second trading strategy, and that is the bullish trend continuation pattern. Basically, we always look forward to following the trend, and that is the case with this strategy. When we trade, we need to be very, uh, you know, careful and methodic in the steps that we take in order to achieve a sound trade. Okay, remember, anything is 100% certain when trading. The thing of developing a strategy is to get a better edge over the market. Remember, when we trade, we are running a business. This is not a casino. Okay. So, as the thing is, we need to be very organized. So, the very strategy that you can observe here is known as the trend continuation pattern, right? So what is this? With this strategy, we're going to look forward certain characteristics in the market and in the very pair that I'm going to trade. The very first thing is that this is a long trend, okay? This is a long trend strategy. So only works for bullish market. Second thing, we can implement it with different time frames. Could be 15 minutes, 1 hour, 4 hour time frames. The thing here is that they have to be aligned, right? Aligned minimum 2 time frames. So if I'm going to trade the 15 minutes, the 1 hour has to be aligned in the same direction. Or if I'm going to trade, the trigger of my trade is the 1 hour, so the 4 hour time frame must be aligned as well. That is the minimum requirement. So far, if I have all time frames aligned, that is awesome. That is even better, right? But the minimum requirement is 2 time frames aligned. In this case, aligned to go bull. The second thing here is the setup on my charts on NT5 or C-Trader or whatever trading platform you are using. You need a standard setup for all your trades. So my setup is, for example, in the case of pricing, I always set my exponential moving averages, EMAs, right? 18, 50, and the other one that is very powerful as well is the 200, but I use it as a simple moving average. The next thing that I have to observe is higher highs and higher lows. What is that? When you see a trend, right, and you potentially want to enter in that move, so you need to observe this, that the peaks are currently higher highs, higher highs, and the lows are currently higher lows, higher lows. So that is the meaning of this one, right? The swings, right? In the current timing that I want to enter in the trade, okay? Again, you have to check the next time frame in order to see if it is aligned. In this case, if I am going to trade or my trigger entry is 15 minutes, I have to check my 1 hour time frame in order to confirm that the trend is strongly going bullish, going long, right? So that is the thing. And also bearing in mind that the EMAS 18 and 50 plus the 200 SMA is aligned as well, right? And also I'm going to pay attention to supports, right, on the EMAs. If the EMA 18, EMA 50 show support for the price on the retracement, that is a good indication. And also, I'm going to use Fibonacci retracement levels to give me a clear indication on how to perform that trade. Okay. Another thing now, before I go with the trigger, is to observe two scenarios. The first scenario is if there is a bullish engulfing pattern, right, to enter in order to place my entry. Or the second scenario is if I have 4 or more small candles on a consolidation pattern. Okay, so that is something that we're going to analyze on the markets. Okay, also a sound entry according to all the criteria. Use stop orders, right? Stop loss orders, but based on what? Both my take profit and my stop loss must be based on the ATR values. In previous videos, I explained how to calculate stop loss and take profit based on ATR, right? So if you don't have this clear, my invitation is to check that video in order to get more information about this topic, okay? And now the stop loss, the distance, 1 hour distance, at least 8 pips or 12 pips regarding, okay, my ATR as well. Again, I already explained that in previous videos as well, okay? And now, super important is to verify that there are no, in the current time, there are no high impact news about to be released. That is critical as well, okay? So said that, let me show you how to perform the trade. Let's go to the charts now. I already analyzed this one here, okay? And I am going to enter on my 1 hour time frame, okay? So let's first understand the steps. Do I see clearly? Do I see? Can I observe here alignments of my EMAs? All right, this is EMA 18, this is EMA 50, and this SMA 200. They are aligned? Yes. 18 is above 50 and 50 is above 200. Good. That is the first signal that tells me that in this moment there is alignment. Okay, on my 1 hour time frame, because it's my trigger time frame. Let's see if there is alignment on the next time frame. So I check the 4 hour time frame, and in fact, I can see that is exactly the same alignment, 18, 50, and 200, and there's a clear direction in the bull, in the long market. That is a good thing. All right, go back to the 1 hour. Now, the next thing that I'm going to check is my Fibonacci, right? So let's see if there is a Fibonacci support. So I drag it, my Fibonacci retracement tool, from lower to higher, right? To see if there is a meaningful support. I can see that in fact, there is on this area almost touched. If you see this one here, I can see that the price retraced, pierced the 38.2 Fibonacci level, right? Went back and now is in this kind of retracement. So I can find support even here. So this trade would be valid even if there is a retracement of this movement till the 61.8. Why I say that? Let's observe the next thing that I have to check. Higher highs and higher lows. Remember when we said this? So here I have on this current peak, I have a higher high. The previous, right? The previous was, look at this. I have this higher high and the current is higher. That is an excellent indication. Look at this one. Here and here, these are higher lows. This one is higher than the previous, And currently, this one is even higher than this one, right? So in that order of ideas, is still valid. It could even come down to this point. So this candle even could drop to this point. Why? Because I have a double support. I have support on my EMA 50 and I have support on the FIBO 61.8%, right? So this is a strong support in here, right? So I could wait for my for the formation to come back to this point and enter there. That could be a possibility. But my entry there would be a limit by order, not a stop by order, right? It's a limit because I am buying, okay, expecting the price to come down to the price that I want to trade. That is the limit in here. If I want to buy here, if I want to buy here, I would place a buy stop order. Don't worry, I'm going to explain both in detail as well. So I just observed many things in here. Fibonacci, higher highs, higher lows, alignment of EMAs, alignment of both time frames, H1 and H4, all right? And also I have these indicators, right? My indicators are these ones in here. I like to use a lot, and that is the standard in my trades. I use what? I use ADX, right? I use ADX, average directional index, MACD, two lines or like cross, stochastics, and force index. So I always check these things in here, all right? In this moment, you can see, you can observe that my indicators, right, are coming on a negative way, right? So these ones in here are dropping on negatives. Look at this. So I can see that my ADX is going negative there. My MACD in this very moment is coming down as well. The stochastic is on the oversold area. So it's on the 20%. So it could be a little bit lower, but then eventually it might go up. And my force index is flat, right? So it's flat in here. So what happens? I can make the decision, okay, based on the following criteria. Everything is aligned in this moment to take the trade according to the core details. So I have two options. One option is basically to, let me trace again my Fibonacci because it's very important this tool here. All right, this is my Fibonacci. So I have two options. Either, right, set a limit order right here on the very support of the EMA 50, right? Or I could enter here right above, okay, this level as a stop order. So I would have to check what? The possibility, right? And the viability of this trade. So let's first go with a potential buy stop. So my potential buy stop entry would be here, right on this place, okay? So it would be my entry point here. Let's see my ATR. Remember in previous videos, I taught you how to calculate this. The current ATR is 30. So it would be basically 30 times 1.5. So 30 pips times 1.5. That give me 45 pips. So my stop loss might be 45 pips. Let me see. 45 pips would be around this price in here. All right. Okay. If I enter here, my 45 pips is on the 163,114. 163,114. This is my stop loss. So if my stop loss is 45, right? I aim the double. So I aim 90 pips to be worth the risk. So 90 pips would be around kind of high. Would be here in the 474 level. 474 level. Let's set it there. That is my potential take profit, right? That's where I would set my stop, my buy stop, right? So it's a decision. Okay, I just have to be patient and wait for the price to retrace as much as possible and coming back here to my entry point. That is the first scenario. Okay, so how to trade it? All right, now I check my website, the one that I have suggested several times, which is this one here, the position size calculator. Always remember, for example, at this moment I'm checking this trade and there is currently no news, right? So no problem, there won't be any sudden movements, so I can be confident. And now let's see what I'm trading here. I'm trading euro yen. All right, so I set my pair euro yen. All right. What is my size? My size account is 9,136. 9136. Okay. Risk ratio 3%. Remember, in every trade we only risk 3%. And my stop loss. All right. What is the stop loss? Remember here, my stop loss is 45 pips. So that's what I'm risking to be the 3%. So I'm risking here 45 pips. So I'm risking 45 pips. So my trade lot would be 0.91 lots. That's the amount I'm going to risk to feed my 3%. All right, so let's do it. So right click, trade in here, new order. Market execution, no, it's a pending order. Buy limit, no, because I'm going to buy above the price. Buy limit is if I buy here with a lower price. So I wait for the price to come back to my lower price to be triggered, but that's not the one I'm going to do. I'm going to do a buy stop because I want to wait for the price to climb up back in here, right? So what is the size? The size is 0.91 lots. So I set it in here, 0.91 lots. My entry price is 163.572. What is my stop loss? It's 163.114. And my take profit is 164,402. 164,402. And look at this. The button on MT5 is blue. It means that is a valid setup. So I just hit it, and that's it. It was placed in there. Let me delete this, and that's it. I have my trade. That is the setup. If I want to wait for the price to, okay, retraces, remember that is still valid if it reaches here, this point. Now, if I don't want to do this one in here, say, for example, that I want to wait for the price to come back down here. So I'm going to place my buy limit order. So I do exactly the same calculation. My entry point, say that my entry point, I wait for the price to come back in here to the 61.1 for the Fibonacci, sorry, to the 61.8 level. And it's a nice entry. Why? Because I have a double support here. The EMA 50 works as support, and the Fibonacci 61.8 also works as support. So that would be an interesting entry. I already calculated that I need 45 pips for stop loss. So my stop loss, 45 pips, is around here, 60, 100. Let me see here. Come on. Let's see. I set it right here on my entry, drag it down my crosshair tool to 45 is around here, 162, 155. So that is my 155, 62 here. That's my 45 pips for my stop loss. Remember, if I am risking 45, is because I am aiming minimum, okay, my 2R is 90 pips. This one is going to be even better, but I have to be more patient. Okay, 90 pips is here. Look at this. 90 pips is right here. Okay, but ideally, and according to the Dow theory, the prices increase, retrace, increase a little bit more, retrace, increase a little bit more. That is the theory. That is what it states. So in theory, the price should come up back till this point, and I would be getting 148 pips. So that would be very, very interesting and very realistic, because I am even setting up here on this very pivot resistance, right? So this is my take profit, right? So this is the scenario for this one here. And the same, I'm going to place it according to the same criteria here, right? Which is what? Which is the same amount, 3%. But of course, if I'm going to do this, it's because I'm going to close the other one. I'm just showing you the two options. Of course, it's up to you if you want to keep both open, right? In case of one or another happens. But if so, you need to recalculate the 3%, because if I open this one now, I wouldn't be risking 3%. I would be risking 6%. But of course, if one is triggered, then I close the other. And of course, I am risking 3%, right? So let's place this trade. Again, trading, new order. Now, market execution, no, it's pending order. What kind of pending order? Buy limit. So why? Because I am buying lower the current price, and that price is 162,627. So it's 162,627. And look at this. The blue button activates because it's valid. If what I do here is not valid, the blue button would never activate because there is an inconsistency on my trade. All right, so that is my entry point. What is my stop loss? 62,155. So 62,155. And my take profit is 64,030. 164,030. Right? So let's place it there. Perfect. Now I have both trades. I have, let me show here. I have my this one here, this trade, this one here, this one is what? Is my buy stop entry, or I would say trade, right? And this one that I just created, let me change the color in order to be very clear. This one here, right? This one here, the one that I just created, is what? Is a buy limit order. Remember the difference. When I place a buy limit order is because I plan and I am executing it by lower to current price. Okay, that is the difference. And if I place a buy stop like this one, is because I buy at a higher price, right, compared to the current price. In this case, both are valid. I'm just waiting to know what happens. Something to observe in here, because I tell you is very interesting, is, okay, the potential profits. What are the potential profits with this one, with the buy stop? My potential profits are $504, right? With this one here, okay, with the buy stop. So the one that they enter here and take this profit here is what? Is $504. With this one is $852, is more. Why? Because I am buying at a lower price, so my trade has more room for growing, right? So that is the interesting thing there. So it's just a matter of patience. And both have the same stop loss, right? And I analyzed everything based on my trading strategy, right? Which is this one in there. Okay, so that is the way how we're going to set an entry. All right, so hopefully this strategy is going to be somehow useful for you. And I mean, I will keep it open. So in coming videos, I will tell you what happened with this trade. So bear in mind, please, bear in mind let me close something here because I want you to take the reference of the time and the date. And I will tell you okay, hopefully in a few hours, right? Look at this. This is March 18th, 2025, 10:21. I placed these two trades. And this is what I trade, Euro Yen. Okay, let's see what happens. I'm going to keep both open. And when one activates, I will close the other one. So I will remain with that 3% risk, right? So this is the first stage for our trading strategies. So my dear people, thank you very much. And remember, if you find this channel and information I'm providing here is something useful, remember, subscribe, like, and share. Thank you very much. See you in the next video.